Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Monday, January 12th, 2015. Let's go into a trade I took today with the intraday stock chat that paid me over $2,500 in profit. Very easy trade. Now, a lot of people were a little skittish about taking it, but again, if you can read the charts, and I'm going to show you exactly how I read the charts, you would have been buying more and more and more at the levels I gave. And ultimately, we were looking here at the SPY, which mirrors the S&P 500. The stock here, or the ETF that tracks the S&P, fell early in the day, making a bottom right here. I bought down here at the bottom and then had it bounce beautifully back right up into this range where I took profits. All right, so let's discuss why I took the trade here. What were the signals that I was seeing? There were multiple signals, guys. Many signals that were beautiful ones here, and I want to go over them. First and foremost, you have to just look at the obvious. You had a 3-bar surge. 1, 2, 3. Anytime you have a 3-bar surge of significant proportions, you know that there's a chance that you could get a bounce if it's to the downside or a pullback if it's to the upside. This was to the downside, so you start to think about a bounce. Now, it doesn't mean that just on that alone you're going to be a buyer. But second factor is very clear. Gap fill right here. All right, so you have a significant gap fill right there. So that right off the bat means that this is going to be support. So now you have a 3-bar surge into gap fill. Okay, so that's another factor. Now, what's another factor here that we want to go over, all right? And I want to show you this very significantly. Well, a couple other minor ones, but I'm going to tell you the major one that really got my attention and made me just say, hey, listen, I want to buy more down here even. The minor ones were lighter volume as you were getting past the 10:30 time frame into lunch. You expect a bounce, which we ultimately did get. But this is the big one, and this is the one that most amateurs and most pros will miss. Take a look at this. Take this high pivot right here at 206.40. This low pivot next at 203.50. That's a $2.90 drop. From this high to this straight down fall low, $2.90. If you take this high here, which was the high on Friday, and the continuation fall into the end of Friday into today, from this high to this low, guess how much of a drop it was? $2.90. What does that mean? Symmetry. It means a perfectly proportioned move. If you add this with the gap fill, the 3-bar surge, the lighter volume into lunch, think about all those positives. That's what I basically was looking at, and that's what my brain does. My brain looks at this, analyzes it, puts it together, and says, this is a buying opportunity. Buy, 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 buy. The bounce came in. Profits were taken as the bounce beautifully ricocheted up to the upside. Why did I move off the table right here? Because in the short term, the 20 was sloping into price. You had a little bit of resistance right here. That was the proper point in the short term. Now, you've made actually a bullish pattern here, which means we could go higher later, but this all is going to result about oil. It's all about oil right now. If oil starts to bounce higher and break to new highs of the day on the intraday basis, then you'll see oil start to rip high, the market start to rip higher. But bottom line is, this is a trade, and this is how you have to view the markets. And this is how I do it in the intraday stock chat. This is how I give out swing trade alerts in the research center. And come to us, InTheMoneyStocks.com. Learn this methodology. It's amazing, folks. Literally picking out pinpoint levels for profit-making moves. I scored over $2,500 on this trade alone. And again, I encourage you to come join us here at InTheMoneyStocks.com.